Hey, thanks for joining us. Welcome to Accent's Telecom and Cloud News Rundown. Appreciate you joining our episode for this week. We're going to be hitting some of the telecom and cloud services highlights and some of the big dealings of the week and some of the, unfortunately, some of the misses of the week as well in the telecom industry. My name is Chris. I'm with Accent. I want to thank you for joining us here. Before we get started, if you want to, hit that subscribe button, give us a like for this video as well. Tell all your friends. You can send us an email at youtube@accentservices.com, or you can check us out at accentvoice.com as well. This shows a little bit of a mix of news and commentary as well. So we're obviously going to be hitting some of the highlights today, but you're going to see my commentary sprinkled in as well. We deal with a lot of these companies directly that are in the highlight in the news. So we've got some firsthand information and opinion here that maybe sometimes don't get added into the hard news reports. I want to thank you for joining us, and let's get started. Shouldn't be any surprise to anybody that follows along in the telecommunications industry. The first headline of this episode is the Windstream Bankruptcy. Now, Windstream is a pretty well-known national communications provider, and unfortunately, earlier in the month of February, Windstream filed for Chapter 11 bankruptcy protection. And got some of the highlights right here. Just read to you from a recent news report. On February 15th, the U.S. District Court of the Southern District of New York ruled in favor of Aurelius Capital Management, a Windstream bondholder, saying the communication giant's 2015 spinoff of copper and fiber assets into the Unity Group Real Estate Investment Trust, or REIT, breached their contract. So after losing a court battle against Aurelius Capital Management, Windstream had to file for Chapter 11 bankruptcy. The court ruled that Aurelius is entitled to a monetary judgment of almost $310.5 million plus interest. Now, that judgment is due July 23rd, 2018. Windstream already has almost $6 billion in outstanding bonds and loans as well. So the combination of this judgment, they owe Aurelius Capital Management for contract violation basically $311 million. You combine that with their already outstanding debt, Windstream had no choice but to unfortunately file for bankruptcy. Now, Windstream hasn't been the best carrier over the years, and that's no secret to anybody in the telecommunications space. They've had a lot of stumbles and trip-ups over the years, just providing poor quality service, some issues with technology in general, and just really not getting great reviews in the industry. If you're a direct agent of Windstream's, or if you're in the channel, or if you're a competitor of Windstream's, this is no secret to anybody. And sorry to air it here, but it's been pretty well known for a while. This is just another black eye on Windstream, quite frankly, and one that's kind of stunning that they would violate their contract with Aurelius like this, just knowingly. In fact, the report I'm reading from here says that Windstream clearly miscalculated the risks of its earlier move to split the company and create a REIT a few years ago. And most telcos avoided this. Windstream basically took all their copper and fiber assets, their physical assets, their network that's all over the country, and they put all those assets into a real estate investment trust. And businesses put their assets into different trusts for a lot of different tax reasons and other financial reasons. We're not going to go into that here. But it's amazing to not only most of the industry, but yours truly included, that they would just knowingly violate a contract like this and do this. It really just points to poor management and just poor decision making. So on top of Windstream's stunning the industry and filing bankruptcy, we've got some more follow-up news. The Windstream bankruptcy also drew a Nasdaq delisting. So Windstream was formerly traded on the Nasdaq, and because of this Chapter 11 bankruptcy filing, the stock's being delisted from the Nasdaq, and that's causing a lot of concern with folks, including Georgia Congressman Doug Collins, who has accused the company of taking advantage of customers and taxpayers. Now, you never want to be in the target of a politician, and especially one that can claim you're taking advantage of people, tax-paying people as well. So we know that Windstream filed for bankruptcy protection, and because of that, the stock will be suspended on March the 6th. That's actually today. at the opening of business. So today, Windstream stock was suspended and was not traded on the Nasdaq any longer. And the company expects to be trading its common stock on the OTC, or the pink sheets, so over-the-counter bulletin board, or sometimes known in investing and finance circles as the pink sheets. So Windstream stock is going to be moving over to the pink sheets market today under the new symbol WINQ. So obviously the congressman here is concerned about Windstream's financial viability. Of course, with their delisting from the Nasdaq to the pink sheets, that's not a good thing. Kind of hurts their brand quite a bit. And just like the bankruptcy filing and the trip up with the REIT that we discussed earlier, this delisting, is black eye number 20 on Windstream's reputation, unfortunately. The congressman goes on to say, despite its bankruptcy status, the burden of Windstream's financial problems cannot fall on the shoulders of taxpayers who depend on the services to access the internet. Windstream must continue to meet its obligations under the Connect America Fund to provide broadband service to rural communities like Northeast Georgia. So a lot of these providers, they get funding from the government with special programs. They get millions and millions of dollars to build out infrastructure, provide internet services to what are considered underserved areas. And the congressman here is concerned about Windstream's obligation to provide those services to his constituency at this point. It makes a lot of sense why he's doing that. But Windstream's going to continue operating. Chapter 11 bankruptcy doesn't mean you're going out of business. It just means that you're filing for basically protection against your creditors, so they can't come and collect money all at once. There are a lot of companies that actually go into bankruptcy and come out actually a bit stronger. GM did that many years ago as well, out of the financial crisis. So this isn't probably the end for Windstream, but it's not looking good for them. Next in the headlines, CenturyLink stock hits historic low, company misses level 3 related filing deadline. Now, the level 3 filing deadline is associated with CenturyLink's acquisition a few years previous now of level 3 communications. And unfortunately for CenturyLink, their stock plummeted past a 20-year low Monday after it reported it's unable to meet the deadline for filing its 10K with the SEC. CenturyLink actually asked the SEC to extend the deadline for filing its 2018 annual report, which was due on March the 1st. And they got a downgrade out of that from Edward Jones, the financial advisory firm, to a sell after the delay. Unfortunately, this ended up with the CenturyLink stock hitting, as the headline here reads, a historic low. And this comes along with the telecommunications giant posting of weaker than expected fourth quarter earnings last month. It cut its dividend as well by more than 1/2 to just $1 per share, and it's trying to cut its overall debt load from approximately $35.4 billion. So this is just another example of mega carriers just being too big. You've got a company here that just is almost getting so large that they can't manage all of the assets and all of the stuff going on within it. You're missing filings, and then posting weaker than expected earnings, and then cutting your dividend as well. This goes along with a trend that we here at Accent have been talking about for quite a while. When you get these mega carriers, and actually, a lot of financial analysts will get together, and when one mega carrier buys another pretty big carrier, you get this situation where there's synergies, and it'll affect earnings positively, and they'll be adding revenue, and they'll have so much more scale and ability to market to customers and reach new people. And what ends up happening is bad service and a company that's too large to be able to be run with any one clear purpose, financial mismanagement, and then ultimately the customers, they bail, they leave, and creates opportunity for businesses like ourselves. I'm not going to deny that, and that's why we say we're big enough to deliver but small enough to care. But I digress. Let's continue reading. The principal reason for the delay is that recently identified material weaknesses in internal controls over the company's revenue recording processes and the procedures for measuring fair value of assets and liabilities assumed in connection with Level 3 communications acquisition have created the need to conduct additional review and testing with respect to those processes prior to finalizing the assessment and the audits of the effectiveness of internal control over financial reporting as of December 31st, 2018. and of the company's financial statements as of and for the year ended December 31, 2018, CenturyLink said in its SEC request. All right, so we're going to translate that here. Basically, they identified material weaknesses in internal controls over the company's revenue recording processes. That means they're not recording their revenue properly, and their material weaknesses and internal controls over it means that they don't know, one hand doesn't know what the other hand's doing. And that's, of course, in conjunction with the Level 3 Communications acquisition. So again, you've got CenturyLink buying Level 3. This happened years ago, and now when they blend them into the hierarchy here, they've got no idea how to report their revenue or what even their revenue is potentially. I mean, they've got an idea, but there's obviously material weaknesses. But not everyone's pessimistic about CenturyLink. In fact, Timothy Horan, a managing director at Oppenheimer, said CenturyLink's 10K has a 95% likelihood of being issued in 2 weeks, and the company will not have to restate earnings. We're not writing off CenturyLink like we are Windstream, but the fact of the matter is, mega carriers, they never work out. They never work out at all. If they do work out, customers aren't happy. Rackspace, the managed cloud services provider, well known in the industry for delivering cloud-based services, started off as an cloud infrastructure services provider, now moved into other managed cloud services. For the third February in a row, announced layoffs, this time about 200 workers. And this report says, despite being a stable and profitable company, Rackspace confirmed it eliminated about 3% of its global workforce of more than 6,600 workers. Last February, it cut close to 100 workers, and in February 2017, almost 300 workers were cut off. This year, it seems to be about 200. Rackspace wasn't specific about the types of jobs that were eliminated and where they were located. The company continues to be stable and profitable, according to Rackspace officials. And Rackspace said, paraphrasing here, as a normal course of business, and like many major tech companies in our industry, we're constantly rebalancing our workforce as we evolve and grow our business. And I can't push back on that. Companies have to regularly identify shift and change where they focus investment. You never like to see people get laid off. You never like to see jobs get cut. But as technology changes, as the industry changes, you need more investment in one area than another area, etc. And it looks like every February after Rackspace probably closes their year, if they're running on a calendar year, if they're running their accounting on a calendar year, they're evaluating things and they're deciding, okay, in February we're going to unfortunately have to change where we're investing, and that means job cuts. Of course, in the meantime, the company continues to hire. It has nearly 200 open positions on its external job site, and it hired more than 1,500 people in 2018. So, Rackspace is growing. The headline here is a little misleading. You got to read past the headlines. If you read this headline off of the a news site or an industry journal, you might think, oh, what's wrong with Rackspace? But they seem to be doing just fine. Of course, Apollo Global Management took Rackspace private for $4.3 billion in 2016, and in the summer of 2017, the CEO was replaced. Again, Rackspace, they've been kind of a leader in the infrastructure services and the cloud managed services environment. We don't see that changing. Their acquisition by Apollo in 2016 makes sense. Private equity is going to manage things probably a little tighter. Apollo does a good job generally of managing firms, and Rackspace, I'm sure, is going to be no different. Well, that was the news for this week. Hope you enjoyed it. Check back each week for the Cloud and Telecom News Rundown with Accent. Hopefully next week it won't be so sour. There's a lot of good things going on in the telecom industry. Cloud services providers that are making a big difference. Unfortunately, the mega carriers, sometimes they have a hard time keeping up. And, you know what they say, big ships, hard to turn. That's why we like to stay quick and nimble here. But this has been the Telecom News Rundown. And you can check us out and learn more about Accent at accentvoice.com. Shoot us an email at youtube@accentservices.com. Drop a comment below if you'd like. Hit the like button as well. Tell your friends about this. We're covering all the major stories each week with a new video with the rundown of the week. I appreciate you for stopping by. This is